Welcome to the Prudent Pulse. We're covering the week of February 3rd to the 7th. Now let's take a moment to address tariffs, which are a tax paid by the importer, and at least some of those costs would almost certainly be passed on to US customers. This would have both an inflationary and negative economic impact in the US, but would likely be more economically damaging to our trading partners, who we have trade deficits with, as US customers adjust demand and US competitors adapt accordingly. Now, as large as our US trade deficits are, we are less reliant on trade than other developed economies, and President Trump is using this as leverage. Some developed economies may respond through easing monetary policy, which the Bank of Canada is already discussing. Now, emerging market economies relying on trade are more vulnerable. Their currencies aren't stable enough to have that as a viable option. And this is why the dollar strengthened over the weekend. Economists expect that tariffs will strengthen the dollar, which would reduce some of the inflationary effect in the US, but not all of it. Now, goods most likely impacted will include cars, oil, electronics, beer, and lumber, which is why home builder stocks are down today. And that's this week's Prudent Pulse.